Today I'm showing you my 2024 crypto investing strategy for massive gains. I personally used this strategy to turn $10,000 into $1 million back in 2021, and I'm going to give it to you for free in today's video. So if you want to know exactly what projects to buy, when to do so and when to sell, make sure to stick to the end, like and subscribe for more content like this one, and let's get started. First things first, what to buy and when to buy. A few weeks ago I made a video about my crypto portfolio, and there you find what projects to buy and the right allocations to minimize risk and maximize returns. But now let's focus on timing. When to buy? To answer this question, we need to look at the charts to understand what happened in previous market cycles and make an estimate of what will happen in the future. Let's begin by opening the Bitcoin price chart because the Bitcoin price dictates the general trend of the crypto market. Looking at the weekly time frame, we can see that the Bitcoin price follows a clear pattern, which is usually referred to as the 4-year cycles model. In the 4-year cycles model, one key event is the halving, occurring approximately every 4 years. This event cuts the reward miners receive in half, impacting the rate of new Bitcoin creation. The reduced supply triggers a supply-demand imbalance, historically leading to price surges. In this video we will use this model to decide when to buy and when to sell, so let's check it in real detail. The model is divided into 4 phases: the post-halving bull run, the peak phase, the correction phase, and the consolidation phase. Let's cover the post-halving bull run. Following the halving, there tends to be a bullish trend as reduced supply meets increased demand. The Bitcoin price experiences significant appreciation during this phase, which typically lasts between 1 and 1.5 years. The culmination of the bull run often results in peak prices and a period of increased speculative activity, which leads to rapid price increases. This is the peak phase, which represents the last period of the bull run. During this phase, the price of Bitcoin and altcoins reaches new all-time highs within 1 to 1.5 years after the halving. A correction phase typically follows the peak, characterized by significant price decline. The correction usually lasts 1 year approximately and begins rapidly, almost unpredictably, after the peak. During the last phase, which is the consolidation phase, prices stabilize and the market enters a consolidation period. This phase allows for the absorption of new market participants and sets the stage for the next cycle. The consolidation phase begins at the end of the correction phase and typically lasts till the halving. Right now, in January 2024, we are in a consolidation phase as the next Bitcoin halving is going to take place in April 2024. So how do we use this model to make money? I don't know when you bought, but to be honest with you, the best moment to buy was of course the correction phase, which took place in 2022 and reached this bottom in November 2022, when Bitcoin was trading at $15,500. That doesn't mean that it's too late to buy, but of course, the later you buy from the end of the correction phase, the higher is the risk. However, the peak is still far, because as we said, we're still in the consolidation phase which anticipates the post-halving bull run, so you're actually right on time to enter the crypto market and sell close to the peak, which I expect to be in October 2025 or 1.5 years after the halving. So you can enter at this stage of the market. We will see ups and downs from here, but what I'm super confident about is that you will be totally in profit in 1.5 years from now. So if you bought at lower prices, good for you. But if you're entering the market now, here is what you should do. When investing, you should not invest all of your capital at once. Professional investors like myself typically use the dollar cost averaging strategy to buy into an asset. Here is how it works. Let's say you have $5,000 to invest. You would have to buy the same amount of money at fixed time intervals, for example $830 per month for 6 months. This will mitigate the risk of buying at the wrong moment. And now the most juicy part, when to take profit and how to do it. It's clear that nobody has the crystal ball, me neither, so it's practically impossible to predict the ultimate peak and maximize profits. So what we can do is to estimate the date of the next peak, which we said should be in October 2025, and start taking profit as we see significant price increases. The worst mistake you can make in your investing is not taking profit. I've seen so many people losing the opportunity to take profit because they believe the price would keep increasing. So here is what I'll do. I expect the next peak to be in October 2025, and since I already bought during the 2022 correction, I won't keep dollar cost averaging, but I will wait until Bitcoin reaches at least 100k before selling any Bitcoin or altcoins, and then I will sell 2/3 of my portfolio. The other third, I will only sell it if Bitcoin reaches higher levels such as 200k, 300k. If it doesn't, I will keep that third in Bitcoin and I will sell it during the 2029 bull run. How much to sell really depends on your profile and investment objectives, but if you bought later than me, that I've been accumulating since 2017, it may make sense to sell all of your cryptos close to the 100k per Bitcoin threshold and exit the risk. This will set you ready to buy again in 2026, 1 year after the peak, at the bottom of the correction phase, and ultimately make insane gains in the 2029 bull run. That's how I'm making a living since 2017, mastering the 4-year cycles model, the very same strategy I showed you today. So if you found this video useful, consider leaving a like as it helps the channel grow, and subscribe for more content like this one. That being said, thanks for watching and see you in the next episode.